Arista Networks Inc., trading under the ticker NYSE ANET, finished its most recent trading session on Friday, December 19, 2025, at a price of $131.12 USD. This represents a substantial gain of 6.50 points, or a 5.22% increase for the day. Since today is Saturday, December 20, 2025, the market is currently closed, but the momentum heading into the weekend has left a lot of people talking about whether this is a temporary bounce or the start of a massive recovery. While most retail investors were busy watching the daily volatility of Tesla stock or checking their Apple stock positions, Arista quietly put up one of its most dominant single-day performances in months. The immediate insight that most people are overlooking is that this jump wasn't just a random technical bounce off support levels. It was actually triggered by a significant shift in how the largest data center operators are thinking about their back-end infrastructure. For a long time, the narrative was that if you wanted to build a serious AI cluster, you had to use proprietary systems like NVIDIA's InfiniBand. But what we are seeing right now in the actual trade data is a massive migration toward open Ethernet standards. Arista Networks is the undisputed leader in this specific niche, and as the big hyperscalers like Meta and Microsoft start to look for ways to avoid being locked into a single vendor's ecosystem, Arista is the primary beneficiary. If you are using a Fidelity trading platform or perhaps checking your Robinhood app for quick updates, you might have seen the price action, but the real story is in the architecture of the modern data center. The common belief among the broader investment community is that Arista is simply a high beta play on the hardware cycle, a company that sells fancy routers and switches to big companies and will eventually see its margins crushed by the sheer weight of competition. People look at the 47 times price-to-earnings ratio and think it is far too expensive compared to legacy players like Cisco. However, the reality is that Arista isn't just a hardware company, it is a software company that happens to sell hardware. Their EOS operating system is what keeps these massive clusters running without crashing, and that software moat is proving to be much deeper than the market anticipated. While NVIDIA stock gets all the headlines for the chips, those chips are useless if they can't talk to each other at lightning speed, and that is where Arista comes in. Looking at the recent stock movement, we saw heavy volume on Friday, with over 12.7 million shares changing hands. That is nearly double the average daily volume, which suggests that institutional buyers are stepping in to build positions. If you are managing your own online investment through an individual brokerage or perhaps using interactive brokers for more complex trades, you should notice that the stock has been testing its 200-day moving average. The fact that it held that level and then surged upward suggests that the smart money is comfortable with the current valuation. We also have to look at institutional activity. Even though there were some recent insider sales by Kenneth Duda, the company's president and CTO, who sold about 56,000 shares recently, he still holds over 3.2 million shares. This kind of selling is often just part of regular tax planning or diversification, but the market sometimes overreacts to it. When you see big institutions like Vanguard or BlackRock holding over 80% of the float, it tells you that the long-term conviction remains very high. For those of you using SoFi Invest or maybe exploring the Fidelity mobile app to manage your retirement accounts, it's important to understand the earnings power here. In their last report on November 4th, Arista reported an EPS of 75 cents, which beat the consensus of 72 cents. Their revenue grew by 27.5% year over year, hitting $2.31 billion. What really caught people off guard was the guidance. Management is now targeting 2026 revenue of over $10.6 billion, with a massive chunk of that specifically tied to AI networking. This is why the stock is behaving so differently from other hardware names. While Cisco is struggling with slow growth in its traditional enterprise campus business, Arista is seeing accelerated demand. Speaking of the business model, Arista was founded on the idea of using off-the-shelf silicon combined with a superior software layer. Instead of building every single chip from scratch, they use high-end silicon from companies like Broadcom and then wrap it in their Extensible Operating System, or EOS. This allows them to be much more agile than their competitors. They don't get bogged down in the massive research and development costs of chip manufacturing, which is why their net margins are sitting near a staggering 40%. They focus on the titans, the massive cloud providers, and the neo-clouds, which are the new specialized AI cloud providers. This concentration is a risk, but it is also their greatest strength. When a company like Meta decides to upgrade its entire network to 800G or even 1.6T speeds, Arista gets the bulk of that business. If you are looking for investment help or trying to navigate these markets through an intelligent portfolio or one of the many investing sites out there, you have to weigh the catalysts against the risks. The big catalyst right now is the Ultra Ethernet Consortium. This is a group of companies, including Arista, AMD, and Broadcom, who are working together to make Ethernet just as fast and reliable as InfiniBand for AI workloads. If they succeed, it could fundamentally change the competitive landscape for NVIDIA's networking division. On the risk side, we have to talk about the supply chain. Management has been very vocal about long lead times, sometimes 38 to 52 weeks for certain components. This means their revenue can be lumpy, and if they miss a single shipment window, the stock could take a hit. Also, NVIDIA isn't sitting still. Their Spectrum X Ethernet platform is a direct threat to Arista, and NVIDIA has the advantage of being able to bundle their networking gear with their GPUs. Comment below how many shares of Arista Networks you currently hold, or if you prefer to play the networking space through something like Fidelity ETFs instead of individual stocks. I'm curious to see if you think the open ecosystem will win over proprietary systems in the long run. Now, let's look at the future outlook. We're entering a phase where the scale-out of AI infrastructure is becoming more important than just the initial chip purchase. As these clusters grow from 10,000 GPUs to 100,000 or even 1,000,000 GPUs, the networking complexity grows exponentially. Arista is also expanding into the campus market, the office networks and branch locations. Their acquisition of VeloCloud from Broadcom earlier this year was a clear signal that they want to take more market share away from Cisco in the enterprise space. They're aiming for $1.25 billion in campus and WAN revenue by the end of 2026. This diversification is key because it makes them less dependent on just a few hyperscaler customers. From a technical standpoint, the stock had been trading in a descending channel since its all-time high in October, but the breakout we saw on Friday moved the price back toward the 50-day moving average of $136.73. If it can break through that resistance, the next stop is the 140 level. If you are doing your own online investing or self-investing, these technical levels matter because they often trigger algorithmic buying. Many people using the Robinhood trading platform tend to buy on momentum, and if ANET clears 140, the momentum could carry it back toward its 52-week high of $164.94. However, you have to keep an eye on the macroeconomic environment. Higher for longer interest rates can put a dampener on capital expenditure, even for big tech companies. To wrap this all up, the central insight here is that the market's expectation for Arista was a slowdown as AI spending supposedly peaked, but the reality is that the spending is just shifting from the chips themselves to the networking fabric that connects them. Arista is positioned at the exact intersection of open standards and high-performance software. We've seen a massive beat in earnings, a raise in long-term guidance, and a technical breakout on heavy volume. Whether you are managing a Schwab Intelligent Portfolios or executing trades on a Robinhood stock trading app, it is hard to ignore the strength of this business model. The contrast between the common belief that this is an expensive hardware stock and the reality of its software-driven margins is what creates the opportunity. The volatility will remain high, and the competition from NVIDIA's Spectrum X networking is real, but Arista has a track record of out-executing everyone else in this room. If you are managing your portfolio through Fidelity Wealth Management or looking for the best Fidelity mutual funds to get exposure, remember that Arista is often a top holding in tech-heavy ETFs for a reason. Its position in the data center is nearly ubiquitous. While we wait for the next earnings date in February 2026, the focus will stay on these daily volume numbers and any news regarding the 1.6T switch rollout. The narrative of the open network is gaining steam, and if that trend continues, the current price might look like a bargain in hindsight, despite the high PE ratio. Keep your eyes on the moving averages and stay disciplined with your entry points.